What's up, everybody? Welcome to this video. Today we're going to talk about the economy as a whole. Is the market going to crash? Basically, it's everything you need to know, right, for you to make your own decision. Stay tuned. Hope you like it. Hope you learn some shit. Let's go. All right, guys. So for our first reason why I think the economy is going to crash is because of the oil market. So pretty much what's happening is Saudi Arabia is flooding the market with cheap oil. So they can make profits on oil around $10 per barrel, and the US needs around $40 plus to make a profit. So they're trying to push these US companies out of business in order to make more profits in the long term, using COVID to their advantage. So what's going on right now is these companies are producing oil, right? Supply. They're supplying oil to the market, but there's no demand. So we see this right here. Passenger travel, freight, and heat. Those three alone are the majority of what oil is used for. Passenger travel, no one's traveling. Freight, semi-trucks aren't delivering at the same rate. Heat, businesses are closed, so they don't need to heat, right? And then all these other stuff are hindered also. So we're seeing that there's very little demand for oil right now, and that's the stem of the issue. So basically, they're running out of physical storage for this oil. There's nowhere to put it. And a byproduct is we're seeing these tankers, right? They're filling up the oil on the tanks, on the tankers, and yeah, prices are going up. So since there's so much oil and no one is buying, this is forcing the businesses to close and many facing bankruptcy, right? As we can see by these news articles, hundreds of U.S. companies could go bankrupt. U.S. companies going bankrupt, blah, blah, blah. No one knows what to do. So what does this mean for the economy? Debt and bankruptcy, right? So these companies are notorious for taking on massive debt loads as it is. So as we're seeing 500 billion. So we can see right here, March 10th, it was 71 billion, right? Now, March 20th, we're at half a trillion already, right? These numbers are getting massive, massive, massive. They're doubling and tripling, and no one knows what to do. So oil prices turn negative. Hundreds of U.S. oil companies could go bankrupt. Diamond Offshore already files for bankruptcy. Four stocks that go bankrupt, right? So look at the articles. Companies going bankrupt. So who's going to take the hit when these companies can't repay the debt? Banks. So let's talk about what happens when the economy reopens. All the oil companies are shut down, bankrupt, and oil production will have stopped. So when we reopen, what are we going to need for the economy? Oil, right? So we're going to go from a situation that we're at right now where there's a lot of supply and no demand to, oh, look, now there's no supply and all this demand, which is going to create massive imbalances in the future because they can't just turn it back on with a flip of the switch, right? All these companies are going to be bankrupt already or stopped or, who knows? So what's the cherry on top? This industry supports 9.8 million jobs, or 5.6% of the U.S. employment, right? And I don't know how much of it's going to be, but we can take an estimate that it's going to be a lot of these people are going to be jobless and unemployed. These are going to be added to the numbers that we're already seeing of the unemployment right now. And the oil industry as a whole is worth $1.7 trillion down the drain. It's going to take a massive hit on the GDP. So what exactly does this mean for the market? No one knows, but it sure looks like there's going to be a lot of problems stemming from this in the future, right? We're going to see banks taking massive losses, and it's safe to say that if this alone was going on in any regular market, this would be enough to cause a massive decline in the market, right? But right now, everyone's worried about the economy opening back up, and we'll talk about this later on in the video. But that's reason number one. All right, guys, so now we'll talk about the reason number two that I think the economy is going to crash, and it's due to our unemployment. So the White House senior economic advisor, Kevin Hassett, had this to say: we're going to be looking at an unemployment rate that approaches rates that I think we saw during the Great Depression. He called the economic state in the U.S. a grave situation and the biggest negative shock the economy has ever seen. Right? Coming from the White House senior economic advisor, this is not good. He says around 2008, we lost 8.7 million jobs. Right now, we're losing that many jobs every 10 days. Keep in mind, this is the 2008 crash that we're talking about, which also took months, if not years, to fully recover from, right? This whole crash has lasted, 2 2 months, and we're already down 15% from where we started in the markets, right? This makes no sense. So on the right, we have a little summary. Unemployment tracks the business cycle. Recessions cause high unemployment. Businesses lay off workers, and jobless workers have less to spend as a result. Lower consumer spending reduces business revenue, which forces companies to cut more payroll. This is a downward cycle, which is devastating, right? So pretty much what we're getting from this, the economy is screwed. The economy is absolutely screwed. But now we look at, is it actually screwed? So this brings up an interesting topic. It's the government is stepping in and saving everything, right? So we'll talk about this in the next slide, but this leads to a new question that have we entered a new era of the economy where whatever happens, the government can just come in and save everything by printing money and injecting into the economy, right? If this is the case, then we're never going to see another recession again, right? And this is what's happening. This is what the government's doing, and this is why we are not 10 points lower in the Dow. So on this left, I have this little graph right here. Pretty much this circles the economy, and we're losing money through these thin lines. We're losing money, right? This is all gone. And what's going on over here is the government is just pumping money in to try to make up for this loss, right? So they're pumping. See how this line, I made it thicker than these because they're pumping a shit ton of money in, and we're losing a lot from different places, right? And so I have the Dow over here to just show you how much we've actually recovered from this devastation with zero good economic news other than what the government is doing, okay? Very interesting. So on top of the first $1,200 stimulus check that we first got, now they're offering $600 a week for 4 months to the unemployed, okay? Now, this is very interesting, and no one knows what's going to happen because this has never ever happened before. This has never happened before. So where does this lead? Well, what the government is hoping is that this works perfectly, right? They're pumping in the perfect amount of money that we're losing, and everything is going to be fine on the flip side, right? That's what they're hoping for. But there's so many other situations that this could cause, right? People could get lazy, right? And a lot of people, $600 a week is more than they usually make, right? And imagine they're just going to be not working, making this money, right? I mean, just use common sense. This could easily turn out poorly. It could create inflation, and there's many other unseeable situations. And then another thing, forgivable loans, right? Like, since when is the U.S. forgiving loans? Like, this is just unheard of. Like, it's wild. It's wild. So if something like this can happen, right? I'm talking about the recession, and everything just goes back to normal. Will there ever be a recession again, right? I do think there's going to be a recession again, right? I don't think that the Fed can just come in and start pumping money in. It's too good to be true, and I have to believe that there will be some kind of economic drawback from this. Like, look at this chart, right? So these gray are the recessions. 2008, we got a big bump. Look at 2020. This is insane, the amount of unemployment. Like, this is so insane. Like, So this leads to the question, right? What are people going to be doing with the money? So are they going to go out and spend this money like everything is normal, or are they going to take more caution, right? This is where you have to make your opinion. Me personally, I don't think people are going to go out and spend this money like everything's normal because things aren't normal, right? I think they're going to be more cautious with their spending, and so businesses aren't going to be making as much money. Will this cause inflation? I don't know. I could see it happening. Who knows what the economic repercussions are, right? And all I know is that I'm not confident at all. So, all right, now for reason number 3, why I think we could see a crash is the market is being very short-sighted. So, with everything going on, the economies are closed, borders are getting closed, every major economy is shut down worldwide. What are we seeing? Down 2% 1 year, coming off the third strongest economy we've seen in the past 22 years, okay? A year to date, down 11%. The past 3 months, right? Keep in mind, this is since before the crash. We're down 11%. In the last month, we've gone up almost 10%, which is how much we usually go up in a year. And Yeah, so let's talk about this right here. Borders closed, right? This is not a good sign. When are things ever good and people start shutting down borders, right? Countries are going to need each other to help, but what's happening? The borders are closed, right? So what we're seeing right here is absolutely crazy. This is nonsense. So let's look at the 10 biggest economies, right? US shut down, Japan shut down, Germany shut down, UK shut down, France shut down, Italy shut down, Brazil shut down, Canada shut down. Everything's shut down, guys. Everything is shut. Things are not back to normal yet. Like, this is, people are getting way out of hand, okay? So let's look at how long it took for the market to fully bounce back in the most recent crash, okay? So what are we looking at? 6 years? Yeah, okay. It took us 6 years to fully recover. 6 years to fully recover. And what's our economy doing right now? We're only down 15% in a month and a half, okay? We're only down 15% in a month and a half. So let's look at the market, right? So only 10% off the 2019 market in the third best year we've had in the past 22 years, right? We have our first best year right here, second best year right here, and this is last year, guys. So what this means is 2019 was setting up for a great 2020, right? So the market was going up fast, which is why it's even crazier how much we bounced back, because the market was setting up. So pretty much the market trades on how people are predicting earnings are going to be, right? So people were predicting earnings for 2020 to be good. So 2019 was going up because people were predicting 2020 to be even better, right? So the fact that we've recovered this much is just nonsense. It's crazy. So why is this happening? Well, people are excited because the economy is about to open back up, right? People are hoping for the best. Well, let's look at how things are actually going, right? So while everyone's all happy that the economy is going to open up, things are going back to normal, blah, blah, we just don't know, right? We're getting articles like this. It's going to get worse. Health officials warn of coronavirus escalation. This other article, the head of the World Health Organization has warned that the worst is yet ahead of us, okay? It's coming in the future. In the coronavirus outbreak, raising new alarm bells about the pandemic, just as many countries are beginning to raise or to ease restrictive measures, right? Nobody knows what's going to happen. So that's what I just talked about. People are hearing what they want to and expecting the best, but we just don't know. This is scary because it looks like we're going to get to new highs soon, right? And we just don't know. That's what it comes down to. All right, guys, I'm recording this as I'm editing the video right now because I just want to add a little bit on this. The fact that we don't know, right? So this is the exact reason I don't want people to get too happy and dump your money into the market right now because it looks like it's going up, right? I'm about to make a bold prediction, and obviously I don't know if it's going to happen, but the economy is going to open up and the market's going to boom, right? So we're going to see a great day. But what's to follow is going to be more news in the weeks coming about how things are actually going. And now more than ever, the market is trading on confidence, pure confidence. And if things start getting out of hand after the stay-at-home orders, that's the type of news that could bring the economy down, right? Like, could you guys picture this, right? Stay-at-home orders lifted, everyone's going outside, people are not following the still caution rules, right? And then COVID just gets way worse, right? I could clearly see that happening. And if you can't, then all right, good for you. But me personally, I could easily see this happening. And this is the type of news that that could drive the economy down, because now more than ever, people are trading on purely confidence based off how they predict things are going. And if the market starts falling, then we're going to start seeing all these other news, right? Because this is what we saw on the way down the first time. The media loves to hop on the bandwagon, right? So, and all of a sudden, and the oil market's crashing, and blah, blah, and blah, blah, right? So this could easily get spun out of control, and this is probably the biggest reason why I'm hesitant. So take that as you will. All right, now what could we see in the future, right? This is the speculation part of the video. So it's an important reminder before we talk about this, no one can predict a crash. If we could, then we wouldn't need 100,000 economists working worldwide. And if they could predict it, they'd be filthy rich and not working anymore. Right? There was that one dude that predicted the crash, and he got a movie, right? The Big Short, right? Okay, yeah. So it doesn't happen often, right? So situation one, the most unlikely, we keep going up from here and hitting new highs, right? Which is what we've been seeing. This does look like a bull market right now, but I think it's more likely a bull trap. So pretty much the economy isn't healthy, And if this does happen, we're probably setting up for a bigger crash in the future, right? It's kind of like a spring effect. There's all these stuff piling up, and it's going to have to hit sometime, right? Like, this is not just going to pass. And if the economy is at all-time highs, by the time that we do have some horrible news, it's going to hit even further, right? And this horrible news is bound to come. So in this situation, I'm talking about when the market's at the top, right? If we do hit new highs, what I'm going to be doing is shorting the economy, holding cash. Or what you could do is put your money in a risky market and risk getting hit with another crash, right? So I'm preaching this right now. You need to hold cash and you need to be patient. As much as it looks like everything's going straight up, it's probably not. Like, obviously, I don't know, but just make the decision for yourself. All right, so next slide. Situation 2, which is the best case scenario, right? So we see this little zigzag, but it's going up, right? So this is pretty much how the market regularly trades, right? So we want to see the market responding to events in a healthy way and go back up to the top, right? That'd be the best situation. So we need to be seeing these up and down, these mountains and crevices, right? We need to be seeing that because that means that the market is responding to events. And if it's not, then, and we just have like this blindsided tunnel vision, like that's just setting up for failure, right? That just means that we're going to see something in the future and it's just going to tank the economy even more, right? So this is what we want to see. If we see this, we're big chilling. So in this situation, you should still hold cash, as you will not know when the ups and downs will stop and end, and invest as if it's a regular market, right? That's what we want to see. So the third situation is the worst case scenario. We're looking at the crash, right? So we're fucked. Like, hope you prepared enough money. Hope you've invested in smart companies and straddle up, and hope you can catch it somewhere over here or somewhere over here. Just hopefully not right here. All right, if you made it this far, I love you. So follow the Instagram. I got the link in the bio. I'm going to post this quote by Peter Lynch about how you can never predict a recession ever. It's a great quote. I'm just reading his book and just literally happened to read it right as I was making this video, so it worked out perfectly. I'll post that on Instagram. If there's like one thing you could take away from this video, like, it would be to read that. It's literally awesome. All right, see ya. Thank you. Like, sub, you know the vibes.